Hi everybody, it's FIBO Group and you're watching to the Market Watch Review. Market participants have been exhausted by the combination of volatility and numerous central bank meetings. The holiday phase seems to have started. Following yesterday's sell-off in the US, equities are under pressure. Japan, China, and Hong Kong lost more than 1.2%, while Australia and South Korea posted minor gains. Stoxx 600 Europe is down 0.7% today. This is enough to make the week in red. The dollar is generally more stable, while the yen and Swiss franc are showing an iota resilience. The emerging market currencies are generally narrowly mixed at 0.25. The recovery of gold continues, as well as the crypto sale. The yellow metal has moved above $1,800 in its third consecutive session. WTI is currently retracing the majority of yesterday's advance of 2%, and today's pullback places it back in losing territory for this week. U.S. natural gas prices are down around 2% today, bringing the week's drop to 6% and the monthly slide to over 33%. As was widely expected, the Bank of Japan did not change its mind and extended assistance for smaller businesses for 6 more months. The U.S. has added 34 Chinese entities on its blacklist to block investment by the U.S. in 8 other Chinese tech companies. In the first week, the dollar was up against the Japanese yen. However, the gains have been trimmed since Wednesday's Fed announcement. Yesterday's rally in the Australian dollar stalled at $0.7225. After yesterday's settlement near $0.7185, it was sold today at $0.7155. Notice that the Bank of England closed on Wednesday, despite all the talk about hiking before bond buying was complete. Although the virus's surge did not affect yesterday's decision on monetary policy, it could still have an impact on fiscal policy. Retail sales rose 1.4% in November, which was the highest since April. The October series saw a 1.1% increase rather than 0.8%. The year-over-year pace was 4.7%, which is the highest since June. Yesterday, however, the Bank of England reduced its Q4 GDP by 0.5%. Yesterday's decision by the ECB was more nuanced. The ECB first confirmed that emergency bond buying would cease in March. Second, the asset purchase program, which was in place before the pandemic began, would double to 40 billion euros in Q2, as well as slow down by 10 billion euros per quarter through Q3. Third, although the CPI was at 3.2% in the latest forecasts, it was 1.8% in the 2023-2024 forecasts, which is significantly lower than the 2% target. The range of the euro is narrow, approximately $1.1315 to $1.1350. Today's calendar is lightened by yesterday's flood of U.S. data. After falling against the Canadian dollar for 2 sessions, the U.S. dollar has stabilized. Yesterday's low was close to CAD 1.2765, while today, the greenback is pushing past CAD 1.2800. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.